Eventually, when you go to public markets are not forgiving. They are
Yeah.
looking at you as any other business, and the business has to generate cash flow. That's the key metric.
Yeah.
I think that we can get to about $1 billion in revenue.
Just like to point out, you said $1 billion in revenue and not valuation. You're not in the valuation game.
Valuations is not the real value. You have to build a sustainable business.
Yeah.
Sometimes getting the higher valuation actually is something that can kill your business. And there are many examples of this.
Welcome to the India Opportunity Podcast. My guest today is Annu, co-founder of Accacia.ai, the first company globally that built a platform focused on carbon accounting and decarbonization in the real estate industry. She has raised funds from some of the best names in the industry, including Accel, B Capital, Bloom, and has just wrapped up a fundraise for a pre-Series A round with large global investors such as Illuminate Fund. Previously, she built and scaled Oxford Caps, a tech-enabled student housing company, and was the director of investments and asset management at Marriott prior to that. She started her journey as an architect and urban planner and has an MBA from INSEAD. Today, I'm excited to deep dive with her into the climate tech space and learn more about what the future holds for Accacia. Anu, welcome. Glad to have you here. How are you doing?
Hi, Shrishti. Glad to be here. And you missed out your name from the list of investors. Uh,
Yes, glad to be a very, very happy early backer of Acacia for sure.
I'm glad and great to have been working with you so far.
Thanks for taking along on this impeccable journey. I think, you're truly building a rocket ship. And I'm so excited about what you're doing and would love to deep dive into it today. Let's start from the very beginning, Anu. What were you like growing up? What were some of the key experiences in your childhood that shaped your thought process?
Um, so I grew up in a like most 80s kids, especially girls in our country, grew up in a very conservative household. We were Sindhis, so my family is like completely business. It's been a business family. We had a family business in manufacturing, printing, and stuff. But as with most traditional businesses in that era, the business being a family business, not very well organized, large but not organized, right? So, grew up in that kind of household, especially when it came to women. My mom, I think, is she studied till like 10th standard or something, or maybe less. So most women in my household were, kind of never went to college. My dad and uncles also, they did some graduation like distance learning and all that, but mostly business, right? So since I was a kid, one, I got a very front seat view of how business is conducted, and I didn't realize it at that point, but I think some of those things got ingrained in me. Like I saw my father and my uncles, kind of, they were always into the business, right? Unlike if your parent has a corporate job, or even when I had a corporate job, you have a very specific weekday and weekend
Yeah.
concept, right? When you are running your own business, that concept practically doesn't exist, right? So a lot of those finer things kind of got ingrained growing up, and unlike a lot of other female friends that I have from our 80s generation, they typically had at least one supportive member in the family who kind of, propelled them towards educating themselves. Fortunately or unfortunately, I didn't. So a lot of growing up was basically just defining your own path, and I think that today is my biggest strength. I am, you can throw me into an uncharted territory completely and I'll find my way through, and that developed not out of any B school, not any education system, but just the way I grew up. So I think that as an entrepreneur is probably my biggest strength, which is where I was able to take this journey especially creating one of the first platforms globally. And I know we'll later talk about fundraise and stuff. It Doing it from India and saying that you were taking a alternate approach to what the global platforms were being funded for, wasn't an easy journey, or wasn't easy convincing somebody. But I think a lot of it kind of comes from the fact that I had very early experiences trying to just figure out things on my own, and I'm able to put that to use in as an entrepreneur. Um, so that kind of led to my entire career education. So completely, kind of figuring out what I wanted to do, and that also gave me no benchmarks, right? So I had no benchmark that once I reach this level I'm happy, right? So I kind of kept setting my own benchmarks and evolving, and I think that's been fantastic.
Thanks for sharing that, Anu. I think that was another thing I related with you on. I don't know if you know this, but I'm half Sindhi. Also grew up in a business family. So I understand the mindset that you're talking about, where women are not necessarily seen as people who should work, or you're not supposed to really have a life after you get married,
Yeah.
or you just get married off and look after your husband's business, or whatever work. But unfortunately or fortunately, I think we are in times today where women have carved their own paths, and I think, like you rightly said, developing that independent and critical thinking from a very early on stage, where you didn't have benchmarks to aspire towards. So defining your own goals and creating your own path,
Mm.
and being very comfortable with uncharted territory, right? Which is what entrepreneurship is
Yeah.
at the end of the day. I think that really stands out in your personality, and that's very clear to everyone who meets you, I think now.
Thank you. Thank you.
Yeah. So, honestly, when I first spoke to you about Acacia, it was very clear to me that you were the best person to solve this problem, given your deep domain expertise and also extensive experience in this space. There was a sense of founder market fit, which was apparent because you had deep industry insights. What were the key insights that led you to start Acacia? Talk to us about the process of discovery and how Acacia came to be.
Hmm. So, I have had a very interesting career and also a view of how real estate industry has functioned globally, right? And one of the things that frustrated me throughout my career is that if you look at real estate industry, you'll either have like very technical people, like your architects, engineers, urban planners, right, who are technically very strong, or you'll have like complete financial whiz, either iBankers, investors, right? And most of them, at least on the finance side, if you see in Asia, they've risen from the ranks of likes of JLL, CBRE. So they've basically risen from a brokerage background for the most part, right? So there were two things that kind of really frustrated me during the whole thing. Is one, uh, if you look at real estate as an industry, it is not just technical and it is not just finance, right? It has to be an amalgamation of both. You can see there excellent examples around the world, where same location, one building is designed some way versus the other is designed the other way. The valuation doesn't work as a 2 plus 2 math on your Excel sheet, right? The design, asset optimization, how it is run as an asset kind of plays a lot of role, right? So that, I think, throughout my career I saw a huge lack of people who are able to put the two dimensions together, right? While the consumers are able to,
Yeah.
right? And the second area, because a lot of your decision making within real estate companies is happening from the finance guys, there was a lack of appreciation of intangible things that were kind of impacting the business, right? And a little lack of a little long term thinking. So if you see, for example, unrelated to climate change, automation in real estate has been one of the slowest, right? Just technology adoption as such, right? It's been one of the most backward industries. So I in the past 3 to 4 years, like since 2020, there were massive flash floods in different parts of the world. And what was coming out of these is that while there is climate change is going to impact all our lives in some shape or form. But when it comes to buildings, the impact is here and now. You are not talking about some intangible supply chain impact which will become like quantifiable 5-10 years down the line, but
Yeah.
you're really seeing the impact here and now, right? So and that's where I kind of had a thesis that real estate is going to be one of the first sectors that kind of comes under regulators radar, um, to sort of tax them in terms of how they're contributing to climate change. And that is going to really change the way real estate companies work, because even the financial metrics will have a huge sort of consideration for climate risk, and that is what was sort of my underlying thesis, and basis that we kind of started conceptualizing Acacia.
Yeah, I remember because, from a regulatory perspective, during our first few conversations, I think SEBI was already contemplating coming out with those guidelines about the top 1,000 listed companies, at least, getting into measurements and carbon accounting. But you were very early to the game, right? Because at that point, it hadn't happened, but it was the talk of the industry that it was about to
Yeah,
happen.
yeah.
So, how did you leverage those insights
It's,
at
I
that
think, still early. I wouldn't say that the regulatory landscape globally, not just in India, even in countries like US, has completely evolved. There was an SEC regulation which has been challenged. SEC eventually managed to pass it, but then it's been challenged in courts now as we speak, right? So. The regulatory landscape will evolve, but I think given that some of these regulations are cropping up in different parts of the world, at least the top 15-20% of the market is kind of already getting up for it. They have been kind of setting their net zero targets, and they have been kind of tracking their emissions, and they're now looking to automate solutions and stuff. So it's still early days in the market. I wouldn't say the regulation is there full fledged, but then I think it makes sense to be early in the market, because once the regulation is, then you're going to have like a really competitive market. And being early to market also means that we'll work with early adopters and kind of be sitting on a lot of data, is that data is kind of what will also help set benchmarks and evaluation parameters for other companies when they eventually start looking at this thing.
Yeah, absolutely. I think your experience with Marriott in asset management also gives you what decision makers typically look for
Yeah.
in these businesses, right? And in these products. So, can you just talk about some of the nuances within that, and then we can go on from there?
Yes, so I think that's where a lot of prop tech businesses, kind of B2B prop tech businesses, also kind of don't do well, is because real estate people kind of speak their own language, right?
True.
And selling to them, if you are not speaking that language, it kind of becomes a little difficult sale. So essentially, in my view, when you're selling to real estate guys, and including a software like us, basically they are output driven, and oftentimes we tend to be more focused on the features of our product and input and architecture and
Yeah.
technology, right? So they, while they are output driven, right? So the whole sales conversation when we go to them is more output driven. First understand which of the three customer buckets categories that we have they fit in, and accordingly kind of sell them more on uh, either the need to automate the tracking that they're already doing, or the need to install a product from day one when they want to start tracking, right? So these two are very different conversations, and I think the focus is more on the output. The second thing I think, which is tricky, at least in our space, is because it's a first time product that most people are adopting. There's the sales process or the buying process is not very set,
Yeah.
as opposed to a CRM or selling a CRM or an accounting software. We are actually working with the companies to figure out the buying process with them hand in hand, right?
Yeah.
So in that case, what happens is that you have to have a very relationship driven strategy. So there are companies that we started talking like a year ago, and now we have signed them. It took almost a year where they did a pilot and then developed did an RFP process, and we helped them with RFP. And so it becomes a very relationship driven sale where the company is also figuring out their buying process with us, along with us. So it's a very, very relationship driven sale for the most part there.
Yeah, absolutely. I think, your experience having been a decision maker yourself and then evaluating, the industry from what's available, even though it was, pre a lot of these things changing in the industry at large. But now I think you can take those insights and actually apply it, which is
Yeah.
potentially what is helping you here also. And real estate industry also is very relationship oriented, right, at
Yes.
large.
Yes.
So I think the sales process mirroring that is just as how the industry works at large. But I know you started initially building for India and Asia and now have evolved into building a phenomenal global business. You were the first company globally to build a verticalized offering for the real estate industry for decarbonization. How has the journey been over the last 2.5 years since you started, and how has Acacia evolved?
Yeah, so the journey, I think these are moments in your entrepreneurial journey where you sit back and think of how much you've done, because on a day to day basis, you just feel like nothing is getting done. Uh, so, uh, so when we started, actually, even before I met you, the challenge or the question that we were trying to answer was build a horizontal versus a vertical platform for a and if it's a horizontal platform, can it be a Asia specific platform or build a vertical platform which is going to go global? So we fortunately answered that question before we raised our first round. And I think answering that question was the most critical part, because what was happening at that point, and this is 21, late 21, 22,
Yeah.
was there were two large companies in US, Watershed, Persephone, who had been massively funded, fantastic investors, and they had taken a horizontal approach. Right. While it is an evolving space, I think for unlike most tech businesses, it is going to be, if not a winner takes all, but the top two, top three kind of takes 90% of the market kind of scenario. So with that, in Asia, we had Unravel Carbon kind of already coming in. But apart from the fact that these companies were funded, I think in my conversations with people that I knew in the industry and others that I was talking to, what I realized was that horizontal solutions were good for you to get like an initial assessment of your scope 3,
Yeah.
right? Or they were good in scenarios where you were dealing with a simple supply chain services industry. The moment you go into a complex supply chain business, the way the horizontal solutions were structured, by using your payables as a proxy for scope 3, fundamentally, which is what
Yeah.
all of these guys are fundamentally doing, was not going to work in complex supply chains like shipping, airlines, real estate being one of them, right? And many others. So, which is where I kind of took a very conscious call that this is an industry I understand, and this industry is one of the largest contributors. So why not build a verticalized solution focused on this industry, because there are nuanced needs of this industry. So from there, it was mostly, kind of then running through the motions of, like, once I had that clarity, then I think it was mostly running through the motions of early GTM, getting pilots, getting the product right, and then sort of looking at which markets come uh, first and which come later. So that's how we started. We raised the round when we had like an early product for real estate industry. We were doing some pilots, then started selling, and we started sales, as you mentioned, in Asia, Singapore kind of being the hub of it. Fortunately, I have worked in Singapore for 10 plus years, so the relationships there kind of helped us get early customers, and from there it was more about using that sort of early product fit to look at which other geography to kind of scale to. And obviously, US kind of becomes the most logical one given the scale of the market and everything.
Yeah, I think, that is such a critical decision that you pointed out, horizontal versus verticalized, because I remember even while we were doing diligence for Acacia,
Hmm.
I spoke to some climate tech experts based out of the US. And I think I shared this feedback with you also, where, they literally said that a verticalized solution cannot work. It needs to be a horizontal
Yeah,
solution. And, we were also conflicted because we were like, how will this really look like in the real estate
yeah.
and infrastructure space, right? But given our experience with real estate and developers, we also understood that this is a very, very complex problem to solve, specifically in the India and Asia region. Obviously, we at that point we weren't thinking of a global business when we invested, but specifically when you look at India and Asia, it needed a much more deeper and complex product built out, which could go into scope 3
Yeah,
emissions.
yeah.
Scope 1 and 2 was the easier piece to solve for, but scope 3 emissions, where you have multiple vendors and supply chain dependencies, that you just cannot do with
Yeah,
a horizontal approach. So I think that was a very critical decision that you took
yeah.
at the start of the journey, and all kudos to you, because I'm sure all investors must have prodded you to take the other route.
I think that was the most difficult part of fundraising, because all the
Yeah,
investors that I was talking to in Asia, and Asia tends to follow the footsteps of
yeah,
what's getting funded in the US. They were basically questioning about the philosophy of a verticalized solution, right?
yeah.
And
Because Watershed at that point, I think, had raised
exactly.
over $50 million or so, if I
So much
remember.
Persephone. But
Yeah,
I want to come to a point that you mentioned, Srishti. So while we took this decision with some other thesis that scope 3 and all that, right? But what you
yeah,
just mentioned, that scope 1 and 2 is easier to figure out. I think our biggest learning past 2 years has been scope 1 and 2 in real estate has to be so much deeper than what horizontal solutions can give you. Because real estate scope 1 and 2 basically are points where you can optimize. So if you
yeah,
need actionable emission, right, if I want to optimize energy, then I just cannot work with my energy bills. I need to kind of look at how much is my air conditioning system consuming versus my lighting system versus my parking. If I'm in a hotel, how much is guest room versus the common area, right? Those are points of optimization. So
hmm.
even in scope 1 and 2, people are not even going to scope 3 right now, but in scope 1 and 2 they want to get to this level of detail, because that's the point where optimization will essentially come in.
Oh, very interesting. I didn't know that the product had evolved to that. So, let's zoom out a little bit, Anu, and talk about what's happening in the climate tech space at large. You're deeply embedded in the ecosystem. Can you talk to us about the opportunities and white spaces that exist? There's been a lot of capital that has been deployed in the sector. So, what in your mind are some of the biggest opportunities in this space still?
Yes, so there are a lot of opportunities, of course, and a lot of climate tech opportunities also tend to be very deep tech, like either hardware, mostly on the hardware side, right? So I may not be, or there couldn't be one single person who can talk with command over everything. But on the software side, I still think that there's a lot of opportunity on doing verticalized solutions for some industries. There are solutions like ours which have emerged, but in other industries. So I recently came across somebody who was trying to decarbonize shipping industry. There was another one kind of working purely on retail as such. Somebody in US started with apparel, uh, textile and apparel. So there are some supply chains where there is opportunity, massive opportunity to actually dig deep into that supply chain, kind of have not just an emissions tracking tool, but how to optimize, decarbonize that industry. So I think some of those are massive opportunities. On the hardware side, I can't speak about other industries, but I can tell you that there is massive opportunity in construction materials. So, green cement, green steel. Just recently, last week, Japan, somebody has come up with, they built a building with a concrete type of concrete which absorbs carbon from the air.
Oh, wow.
So instead of having embodied carbon, it's actually acting as a carbon capture, material. So there's massive opportunity, at least in the top emitters, which is steel, cement, concrete. So there's opportunity there. In the fit outs, I recently came across somebody who was doing like a plywood alternate, right? So a more sustainable. Plywood alternate. So there is massive opportunity there, as such, right? And then third space, I think, is definitely energy transition, right? On a whole. So within there are companies like Solar Square who are kind of working on one thesis. Then there are a lot of other companies, at least in US and Europe, who are working on energy optimization as such, focused
Yeah.
in buildings, and different asset classes, right? So massive opportunity in just energy transition as such. I think there's a fourth one also, which is kind of around climate financing. So there are a lot of subsidies, but at the same time, there private financial institutions are now, yeah, and we are kind of working with some of them to see if we can evolve such a use case in our product, at least for the buildings, is where they want to offer financing at better rates, but the financial institutions lack the technical expertise to kind of evaluate green projects, right? So I think there is massive opportunity to bridge that technical gap within the financial institutions as well for different industries.
I think you're really leading the pack when it comes to verticalized industry solutions, like you mentioned. I think now Acacia will be taken as an example for a lot of these companies which are going out in the market now.
We're too early to be taken as an example, but
No, of course, you were the first. So, and globally now. So, you've established a presence. And I think a lot of people, at least in the industry, know about you. And
yes.
especially founders who are building in this space and that too looking at verticalized solutions where you didn't have examples, but now they do in terms of Acacia, right? And similarly, for all the opportunities that you mentioned, I think building materials, alternate materials, such a big space that I'm also seeing a lot of developments in, and energy optimization, obviously, as well. So, for founders who are looking to get into this industry, I think those are some fantastic examples to dive deeper into and learn more about the
Yeah.
space as well.
I think somebody who's building vertical also kind of needs to look across. Like when I said we are doing a lot of scope one and two, which also means that we are really deep diving into energy optimization into buildings, right? Decarbonization. That's basically optimization in real estate.
Yeah.
Similarly, when we are looking at decarbonization, we're also looking at building green buildings, net zero buildings. We're also looking at helping people look at like green financing for those
Hmm.
solutions, right? So being vertical kind of helps you cut through across these,
Yeah.
because I think climate is kind of going to emerge in larger enterprises as a key function, and what we aim to do as a vision is kind of be that platform, right? The SAP, Oracle for the climate function and real estate companies, right? So being early allows you to kind of do cut across, and then as the space evolved, of course, there would be like specialized solutions to cater to all this, which can plug into the platform.
Yeah, I think taking a closer look, since you mentioned that you initially started out as a SaaS solution and now have evolved into a full stack platform for enterprises in the real estate industry. Can you explain how Acacia makes money and what do the unit economics look like in the sector?
Sure. So how we today make money or how we have made money until now would 5 years from now would look very different, of course, as the space evolves. Until now, we are a full SaaS solution where we have a SaaS which we deploy with the clients. They kind of track their emissions through that. But now most of our clients are in that journey where they have set their baseline emissions and they've set their targets. So now, starting this year, they're going to start looking at decarbonization, investing in decarbonization solutions. So
Right.
our decarbonization part of the platform is a recommendation engine come marketplace. So we have taken a very interesting take there where we have built that engine bottom up. We went to like the different technical solutions, innovations that are happening in the market, understood what they do, and basis that created a backward rule based engine to say that okay, if you have this kind of a, let's say, a new kind of refrigerant that goes into air conditioners, then what model, make, loads, would this kind of work best in. So basis that, we've kind of created a rule based engine. Somebody has that kind of air conditioning systems, it will automatically recommend you should use this refrigerant, which is an easy way to reduce your emissions, right? So once decarbonization kind of picks up, we expect we are kind of a customer acquisition channel for all these decarbonization solutions, right? So we are kind of making a transaction fee or an introduction customer acquisition sort of fee on those. So I think for the initial 5 years, about 60 to 70% of our revenue will come from SaaS, pure subscription fee. But as the market evolves, decarbonization and green financing could be like 60 to 70% of our revenue or more.
Yeah, I think that's a fantastic evolution also from, where you started and the opportunities that you are seeing now as a business as you continue scaling.
Because,
And tell me,
because
yeah.
I think as the regulation evolves, SaaS or a technology solution as such will become more commoditized, right? So you kind of need to go deeper into that to build sustainably.
Yeah, absolutely. And you were able to onboard some of the biggest client logos in the country, then Asia, and now globally. You have Heinz, Brookfields, and so many others, some of the largest players in the industry. I think that was a combination of both a pressing need of the industry and also how strategic the founding team was. How did you convince some of the biggest names in the industry to work with you?
Well, one with a lot of patience.
Yeah.
'Cause I think transitioning from a B2C business to an enterprise B2B, I think I've become a much more patient person past 2 years, which is very important. But I think, as I mentioned earlier, with most real estate companies, at least in this part of the world, uh, the pressing need is essentially as simple as we have a global mandate, we have set some net zero goals, and we have to start doing something about it, right? The
Yeah.
problem statement is as simple as that, and the problem statement sits with the CEO for the most part, and after that they don't know anything, right? They don't know who's going to do something about it, how they're going to do something about it, how much are they willing to spend, right? So essentially, one of the other reasons of starting sales in Asia was also because I had very close relationships with some of these guys that you mentioned through my
Yeah.
previous career, right? So there was a certain level of credibility that was already there. Some of them were also angel investors, either now or in my previous venture, right? So it was more around sitting with them, trying to understand how much they know, and then kind of going from there to help them figure out exactly each of these questions, right? Who in their company, they need one spock, somebody either they promote to be an ESG person or an asset manager or an operations person is becoming the key, right? How do they start? What does scope one, scope two, scope three emissions even mean, right? How to look at that data. So the sales process was very consultative, and I think just being patient through that process was kind of key. Patient and the trusted advisor, so to say, right, was key, which kind of helped us back some of these guys. globally, not just in India, right? And I think for next 2 to 3 years, the sales process will kind of continue being there. Post which, I think the industry will kind of look at that hockey stick momentum where you'll see companies coming up with standard RFPs documents to sort of ask for decarbonization vendors.
That's so interesting that you say that, CEOs didn't know exactly what to do about the problem, right? And like even that problem of process of discovery with them must
Yes.
have taken a
Yeah.
while to come around.
And not just so because they don't know, and it's a very technical space. A lot of them actually come with the thinking that okay, the more day we install the solution, we'll have emissions reduction, right?
Yeah.
But it's a very complex process, right? So you need to educate them that okay, you need at least 1 year, different seasons kind of data to even set your baseline. Because if your baseline is, let's say, set against 2020 when nobody was coming to buildings, you will never be able to show significant reductions year on year, right? So getting the
Yeah.
baseline right over a period of at least 1 year is kind of critical. So just having those conversations and educating through the whole process was, I think, the key.
Can you give us some names of your biggest clients that you're working with right now?
Yes, so in India, we are working with Heinz, as you mentioned. We signed JSW, Jindal Steel, I think 2 months back. We are working with now Blackstone. Um,
Wow.
so we are working with quite. But again, these are because it's early days of the industry. Basically, these are kind of the industry leaders, the top 10% of the industry who will be early adopters, right? So even when we do sales right now, our focus is not we are selling in Middle East or we are selling in Southeast Asia. Our focus is basically in Asia, who are the top 25 guys who will be early adopters, right? They could be sitting anywhere. Because in some sense, real estate is borderless, right? So a capital land, even though they are headquartered in Singapore, their assets, about 40-50% of their portfolio is China and India, right? So they have to kind of we have to kind of look at a global solution from day one.
Yeah, absolutely. And you're freshly coming out of a fundraise. Actually, not freshly, it's been some time now. It just took
Yeah,
a whole long time to come together,
yeah,
and have been able to onboard some of the best investors globally: Accel, Illuminate, B Capital, Bloom, Rainmatter, SSV. I'll mention that since
yeah.
you pointed that out. First of all, congratulations.
Thank
But as someone who's watched you closely during the time and was one of your earliest backers, I know this comes after a very, very strenuous period. Both the rounds took a while to come together, and I must say that you were so resilient through it all. What was your fundraising experience like? Share the behind the scenes for founders who may be going through a similar journey.
Well, I think the most recent race, the second round, I would say was it took time because of structuring issues. So it
Yeah,
wasn't the round coming together, which was the real issue. Um, so I'll actually talk about the first round because that was the one which was kind of the breaking point, and we also managed to get investors like Axel and B Capital on cap table then. So I think at that time, what we talked about earlier, there was a lot of question behind horizontal versus vertical, right? So,
yeah,
and I'm sure that is typically a question when when you're coming up with something new, and especially in Asia, right? We have a tendency to kind of follow
yeah.
things. But I think what is important is one, just kind of listening to the customer, right? So I knew the customer very well, and I knew that whatever any VC might say, the real estate industry is not going to use a horizontal solution,
Yeah.
right? I even at that time I had gone to US, spent a month there, and I met with like the top 50 guys. Like every day I was meeting 5 people, and it wasn't just in Asia, right? So none of them by that point was using a horizontal solution, and they had all evaluated,
Hmm.
right? And there were very specific reasons which were very aligned with what my thesis was. So I think listening to your customer is kind of really, really important, because eventually you'll find that one VC who will kind of understand it, but you cannot start something which eventually doesn't sell, right? So I think listening to customer and having that proper market research early on is kind of really critical. And then fundraising is a process of persistence. I in our company we kind of try and do this, that when we're fundraising, one person is focused on sales, and the salesperson will never, unless absolutely we're going to the last round, come to the fundraising meetings, because in fundraising you need one yes out of 100,
Yeah.
but in sales you need like 99 yeses, right? So if you get used to that mindset of having 99 no's, then you are not going to be a good salesperson anymore, right? So
Yeah.
it just needs a lot of mental resilience to be able to not just hear no's, but also I think a lot of times, and I've made this mistake when I was raising for my previous company, that as founders we tend to feel that if we are founders we are basically kind of at the receiving end, and that that sort of equation kind of comes out when you're raising, right? As long as you're confident, you know what you're building, you have spoken to your customers, it's basically a game of persistence. You are able to drive that confidence in the investor, it will kind of come through.
Yeah, but I think more than persistence, it was also the momentum that you were able to show during that fundraise,
Yes,
right?
yes,
Like,
yeah,
I remember you were just going on, you were on a logo hunting spree, and you were closing some of the biggest names like DLF, Heinz,
yeah,
Sharper G, Lemon Tree, so many of them that you ended up signing POCs with at that point.
yeah.
And it was just a sign of resilience and also momentum that you were able to show that while the round was coming together at its own sweet time, but at least the momentum didn't go away. I think that momentum definitely accelerated some of the funds coming together the way they did towards the end, because the momentum was always there, and that's
Yeah,
such a critical
that's where segregation of fundraise, at least for those 6 months, from the core business is kind of super, super critical, right?
yeah.
They are, if you're two founders or three founders, at least one and two of you kind of need to be completely 100% focused on business. I think just I've seen a lot of founders, uh, both of them or all three of them are like completely focused on fundraise. I mean, even if the fundraise is getting delayed, even if you're not able to raise, you have to continue with the business. And the fact that you'll continue with the business will probably lower the need of the fundraise, if anything, right? So that I think that continuing treating the business as a business and fundraise as just an activity that is required to be done in the business is very important, and not get bogged down by fundraise as like the entirety of the business.
Yeah, I think, I am very often surprised when, if there are three members in a founding team and they all show up for fundraising meetings.
Yeah,
And then I'm like, who is building the business at the end of the day, right? But in your case, it was very clear that, I spoke to Jagmohan and your CTO, but they were doing what was required to be building and focusing on the business at that point while you were out there fundraising, and you were also deeply involved in execution, but at least the sales
yeah,
momentum carried on.
yeah,
It didn't stop
yeah,
while the fundraising
yeah,
discussions were
yeah,
going on.
yeah, 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 yeah.
Yeah.
And I think that's super critical, is uh, because sales reasons I told you, business focus reason, and also the kind of mindset you need for fundraise versus the kind of mindset you need for operating a business, right? Sometimes are not exactly in sync, right? When you're
Yeah.
fundraising, you're talking of 10 years from hence, right? How will you get an exit? At what valuation you can do an IPO, M&A, right? You're talking of all those things. Whereas business right now, you may have that thinking and you can communicate it to investors, but business right now needs one or two people who are just constantly thinking of what my 6 month, 12-month targets are, right?
Yeah.
And in your founding team, having that segregation is kind of really important, because not everybody can do everything as
Yeah. Absolutely. And, diving deeper into your past experience, so building a climate tech company is very different from building a B2C
oh
student
yes.
housing company, right? How have you personally evolved as a founder? Talk to us about learnings from your first venture and how you are applying those while you're building Acacia.
Yeah. So I think one, B2C to B2B is completely different in terms of the sales cycle. So I've become a lot more patient person through the process,
Yeah.
which is a good and bad thing. But I think that that is an evolution. But I think some of the things that I learned from my previous venture is. There are lots of operational things that you learn, which as a first time founder you'll kind of make mistakes on, but some things that I think I've carried forward, two three big things is one, just being very process oriented from day one. Right, so even if there are three of you, but there's some semblance of process, right, and it doesn't have to be a very thick process, right? We extensively use like Notions, Airtables of the world, right? We until now we don't have a CRM. We are now probably going to get a formal CRM, but we've built a CRM on Notion, right? But just kind of having a semblance of a process where you are able to sort of document whatever you're doing from day one, is I think super critical, which probably we could have done better at Oxford Caps. Right, I think that's one of my bigger learnings, and which is where both our rounds, touchwood, diligence was like a breeze, right, because we are always diligence ready. As a rule, we are always diligence ready. So I think that's one thing that I learned. Second, I think the other thing that as a first time founder we kind of make a lot of mistakes is actually not looking at the top line and like the P&L metrics of the company, but not kind of really watching like a hawk in terms of your cash flow, right? Eventually it's a cash, your first 5 years 6 years of the business are 80% about survival and then anything else, right? So I think that is one thing in terms of just tracking your runway, tracking your burn, is something that we became like really process oriented on from day zero. So Ravi, whom you've interacted with, my finance person, his target for first 6 months was the moment we raised the capital, we kind of tweaked our business plan to become a lot more granular for operational purposes. His target for first 6 months was he has to get like the budget versus actual variance to less than 1%. um, right, so now, at least before we close the round, our actual versus budget for 8-10 months is like to the T. And that gives, and we don't realize, but that gives you a lot of mental freedom in terms of not having to worry about administrative things, right? So a lot of that kind of goes off my table because it's processed out and it's set out in the beginning. So just getting that administrative task upfront where you're not so much loaded with multiple things is, I think, super important. The more you delay it, the more difficult it becomes to set processes. I think that is one of my biggest learnings. Yeah. And other than that, I think just kind of knowing what are the two key metrics of your business, right? At Oxford Caps, it was basically kind of uh, expanding revenue and watching the margin, right? Their operating cost was like the main lever. Here,
Yeah.
the metrics are very different, right? Here, you're basically talking about, yes, of course, increasing your ARR, but I'm also watching what percentage of our ARR is basically coming from the big logos, which will have like a multiplier effect, especially when you're building vertical, right? So just understanding what those two metric, you don't need to go to the third one, but for the first 3 years kind of have those two metrics which are kind of super critical for your business, and just watch them like a hawk, basically.
Spoken like a true second time founder with lots of wisdom, learned the hard way. Have your diligence docs ready in a data room, be process oriented, and
Otherwise, half your time is kind of going into administrative
yeah,
tasks, right? Like
yeah,
approvals for this, OTPs for that, and it's
yeah.
it's just useless, unproductive time.
Yeah, absolutely. Now coming to, what is your personal ambition for the business, Anu? How big do you think Acacia can become? What do you personally believe is the opportunity in front of you?
So I honestly think the opportunity is massive. I feel that there's this company called Yardi, which is like the largest verticalized SaaS in real estate industry. They do property management, accounting, a lot of it for real estate. So Yardi is bootstrapped, and they are privately held, about $1 billion in revenue. I think that we can get to that level for sure, because climate, one, there is a whole real estate climate angle, but I think what we've also just not even started exploring is that for most other industries, their scope 1 and 2 emissions are coming from the buildings that they're occupying. So, down the line as the space matures, there's a huge data business that, because all these watershed or verticalized solutions, they'll be kind of, my thesis is they'll be talking to each other, because one's data would be important for the other one to kind of understand their emissions, right? So I think there is massive opportunity in that inter industry data play. There's also massive opportunity in kind of just touching all aspects of real estate from a sustainability perspective, like be it green leasing, be it like green financing, or lending rates, with respect to climate risk. So there's massive opportunity in touching all these different aspects of real estate. I strongly feel that we can be that one platform to run the climate programs for real estate companies, and that's where we would like to be. And in that, there would be like different parts of what we are doing to touch different parts of a real estate company, essentially.
Just like to point out, you said $1 billion in revenue and not valuation. You're not in the valuation game. You're not chasing the unicorn tag, but $1 billion in revenue, right?
Yeah,
Because I think,
valuations we've all seen, right? Like I bought some SaaS stocks in 2020 IPOs, and we all seeing the valuations, right? The valuations is not the real value. You have to build a sustainable business, and I think 5 years from now, I'll not even be talking about revenue. I'll probably, hopefully, be talking about margins, right? So eventually, when you go to public markets, now we all have seen startups go through that journey,
yeah,
fortunately. When you go to public markets are not forgiving, for the most part, right? They are
yeah.
looking at you as any other business, as such, and the business has to generate cash flow, right? That's the key metric.
Yeah. I think free cash flow, return on equity, ROCE,
Correct,
three
correct,
key
correct,
metrics that
correct,
make or break
correct,
businesses in the
correct,
public
correct.
market, right? And where startups have historically struggled after going public is that, they cannot grow into the valuations they raised
Yeah,
at. A lot of them see even 40 to 80% declines
yeah,
within
yeah,
first year of going
yeah,
public.
yeah.
So, this valuation game and the hype around valuations and the media focus around it is so, so, so meaningless at the end of the day. Ultimately, it has to be around
Actually,
business
whenever
funding.
I close a round, Shrishti, that 2 weeks following that is like I'm like really in a freak out mode, because now you somebody has valued you on a forward multiple, and you
Yeah,
need to grow into it, right? So raising a round at a specific valuation is more of a responsibility than an accomplishment as such, because now you have to grow it that much faster into that valuation, right? So
yeah,
sometimes getting the higher valuation actually is something that can kill your business, and there are many examples of this.
yeah.
I recently learned something, which I've started adopting. Uh, I heard this, I think Mokabara's founder on some podcast, and he was talking about that he listens to earnings calls of like
Yeah.
industry incumbents and look
Safari,
at what,
the
yeah,
world.
what metrics are they kind of talking about, right? So I think as startup founders, we should also start doing that. I really picked that from him, and I've started doing that. You should, if you're a SaaS founder or any incumbents in your industry, you should start sitting through earnings calls, because that really tells you, what public markets are looking at, what really matters at the matured stage of the business, right?
Yeah.
I think I really picked that from him.
Yeah, absolutely. I think, I am actually a big believer in that because I personally listen to a lot of these earnings
Mm,
calls,
mm,
and I've been investing in the public markets for almost 15 years now.
mm.
And I think that's where, even for my private market investment decisions, I get a lot of insights because, industry leaders are telling you exactly where they're going to invest in the next 2 to 3 years, right? So, what better examples can you get from the market where the customers are telling you what they want to invest in? So that gives you a very informed perspective into where the world's going, rather than just looking at random market sizing reports and coming up with different TAM numbers from that. I think the better thing to do is probably tune into these public market calls and pay attention to all the information which is out there, because there's so much to learn from these
Yes.
companies and such substantial businesses that have scaled beautifully over decades. So it's so much to learn from there. But coming to your personal journey, are there any specific challenges or setbacks that have played a significant role in shaping your perspective and approach?
Um, I wouldn't say setbacks, but more of, I think, the way I grew up, and I think that kind of always made me, um, for most part, a very strong personality. I typically kind of know what I want, and if I know what I want, I'll figure out a way to do it. And I think that uh, that is kind of the core of my personality, and that was shaped during my early years for sure.
Yeah, I think women being told that you can't do something or you cannot go after something is the biggest motivation,
Oh
even
yeah,
for me personally, right?
yeah,
I think we're both examples of that. We're told very different things in terms of how we were brought up, but we broken from that conditioning and emerged into our own. So more power to you
yeah.
for doing that, and I think completely rooting for you as you
Thank you,
continue to
thank
scale
you.
and grow. Looking ahead at the age of 80, Jeff Bezos has the regret minimization framework, right? Which he talks about looking at life from when he's 80 years old and looking at life decisions, and he works backwards for those decisions. So, what profound insights do you think you will have at the age of 80?
Wow.
Specifically, distill it into one significant learning, one regret, and one pivotal life decision.
Oh wow. Uh,
Heavy loaded question.
Very. Um, I think one significant, if I have to say regret, then I would say that I think in my 20s and 30s, I probably worried too much. I think a lot of us kind of worry about things that are happening on day-to-day basis, but sometimes we need to zoom out and look at it from a 10, 20, 30-year perspective. Those things probably are irrelevant. So if I had to do it all over again, I would probably worry less and exercise more, for sure. So health kind of is very, very important.
Absolutely.
Um, then, in terms of what I would be happy about is that whatever I wanted to try in life, I was able to try. Whether I succeeded or not, is a factor of a lot of things that we'll see during the course. And some of those things can often be out of your control as well. But the fact that you go try, give it your best, and persist through it, I think is important. And that is something I'll not have a what if, think, hopefully at the age of 80. So that's the good part. And that's something that won't say impulsive, but that's something I like to do in my personal life as well, right? If I want to try something, I do try it. If I don't like it, it's okay, but I'll
Yeah.
definitely try it once. Uh, in terms of pivotal life decision, I think getting married to Amar would be my pivotal life decision because
Oh.
uh, because my early years I grew with a family which wasn't very supportive, but I think after being married, and somehow and your spouse kind of plays a more pivotal role in for the most part in your life as an adult than your parents ever will, because that's kind of the real family that you grow yourself, right? And I also, through that, kind of learned the difference of how you perform when you have an unsupportive versus a very supportive family, right? Your outlook towards life, it takes a while, but your outlook towards life can kind of changes, right? Because the family being unsupportive also means that somewhere you become constantly in a fighting mode, right?
Yeah.
Which as an adult is not the best thing to probably have, was the right. So I think that is kind of the most pivotal thing in my life.
Wonderful, because I think Indra Nui says that for women, I think the most significant investment decision that you can make in your career is possibly the spouse you choose,
Absolutely.
because
And not just for women, I think for men as well, right? I
yeah,
mean, for anybody, because eventually you come together as a family unit and you define the kind of life you want to have. Uh,
yeah.
Regardless of gender, I think that's sort of the most important decision you'll make in your life.
Yeah, absolutely. I agree. Let's move on to the last segment, rapid fire. Keep your answers quick, whatever first comes to your mind. Are there any books, podcasts, or resources that have had a profound impact on your life or career?
Many, but I think something that I read more recent as an entrepreneur would be Steve Jobs' biography. I think his product obsession and the whole journey that he kind of went through, fantastic, really inspiring.
Love it. One professional and one personal goal over the next year.
Professional kind of, we have to expand in US, so kind of really focused on North America now.
Yeah.
So just will be spending a lot of time there. Personal, I actually kept a goal that I want to learn driving this year. I used to drive before, but when I moved to Singapore, I haven't driven in like almost a decade. So now that I have to spend a lot of time in US, I think I need to pick it back.
Some of the most beautiful road trips that you can possibly go on are in the US. So while you're there, if you need time to meditate or just go off on your own, good
Yeah,
time to learn as
yeah,
well.
yeah.
Which person has had the most formative impact on your life?
My grandmother. Unfortunately, I recently lost her.
Sorry to hear that.
87, just like 2 days before we signed our documents, so in the middle
Oh,
of the round. And she was basically my parent, and I think I learned a lot from her because her father, my great grandfather, was one of the top 5 6 guys in the independence movement, so a very authoritative figure. And he, ironically, in those days, kind of really, uh, you know, he had 5 6 girls, my grandmother being the eldest, and he trained a lot of them and not only educated them, but also, kind of trained them. Like my grandmother was trained in some sort of war art and stuff, right? So very
wow.
strong women, just kind of with the partition and stuff culturally, things changed a lot as opposed to how they were brought up, right? So I was very close to her, and I think she had the most impact on me.
That's so wonderful. Thanks for sharing that. What's the kindest thing anyone's ever done for you?
Oh, that's an interesting one. So, I wouldn't name the investor, but 2020, when the COVID lockdown first happened, one of our investors from Singapore, he got into this habit that every morning at like 7:30 or 8, he'll call me and he'll just chit chat for like 15 20 minutes, right? Just talk about what is happening, nothing about work, because our hostels were closed. There was barely anything to talk about work, right? Just did you watch any movie? Like just having a casual chit chat. And he would hardly call me like even once a year, and it became like an everyday thing. And then I kind of one day was I am not an early riser, and COVID was the best time to catch up on your sleep. I got frustrated. I asked him, "Is there anything specific? Otherwise, we could schedule a call in the afternoon or something." Uh, so he's like, "No, I was just worried about you guys because your business has been so worried. So I just wanted to make sure you guys are doing okay." And he did that diligently, like every single day for 15 days. I think you don't meet a lot of investors who kind of think of founders first that way.
Yeah, I think checking up on your founder's mental health, a very kind thing for him for sure at that point to do,
Yeah.
especially with a business that was so impacted at that time that
Yeah.
you were building.
Yeah.
Anu, this was so great. I really loved having this conversation with you. Learned so much about you, and I'm so excited about what future holds for Acacia. All the best to you, and can't wait to see what you do next.
Thank you so much, Srishti, and I'll catch up with you soon. Thanks for
For
having
sure.
me.
All
Yeah.
the best.
Thank you.